Hello, everyone, and welcome to another episode of Ocean City Realtor Insider, Salty Air, and Shoreline Living. I am Lisa DeStudio, and today we're diving into a topic that's both intriguing and potentially life-changing: building wealth through reverse mortgage. We often hear myths about reverse mortgage, about how many of these are true, and more importantly, how can a reverse mortgage actually benefits you, especially in retirement years. If you're planning on retirement, this episode is a must listen to. So make sure you stay tuned till the very end, as there's so much wealth of information coming your way. And here's something you might not know: money from a reverse mortgage is counted as loan proceeds, not income. And guess what? If it's tax-free. This could be a game changer for many of you. Today, we're joined with Elaine Perry, a seasoned expert licensed in New York, New Jersey, and Florida, specializing in reverse mortgages. And that is the reason why I wanted her here today. She is so knowledgeable in this area. You are going to get so much value. Elaine, thank you for being here. You're going to shed light on how reverse mortgages can be more than just financial tool. It can be a stepping stone to achieving your dream home. Elaine will explain how this is achievable. Yes, you can do this depending on your financial portfolio. Remember, reverse mortgages aren't for everyone, but they could be the right move for you. So, Elaine, how are you today?
I'm excellent. Thank you.
We are so thrilled to have you and let you take the lead, but I've got plenty of questions to make sure our listeners get the full picture of this so they can make an educated decision. And so let's dive in and unravel the potentials of reverse mortgages. So I'm going to let you take the floor.
Okay. Reverse mortgages are for primary residence only. So it's not an investment in property, but you could take the money and buy a second home, a car, a vacation, or just do something that you've been trying to do for 35 years and could
Um,
not. You could also put your grandchildren to college. You could give your children part of an inheritance now and watch them enjoy it by buying another home. It's an amazing program. And the best part is it's all tax free. The government cannot tax what you've already been taxed on. So it's the only loophole we have to take money out. You do have to pay your real estate taxes and homeowners insurance. That's the requirements,
mhm.
because that's the only way you could get foreclosed on if it is not paid. If God forbid you pass away or the last survivor passes away, your children have a year of quiet enjoyment, either to refinance or sell the property and take their proceeds.
Mhm.
They will never not have proceeds from the house. If in some cases you live 30 or 40 years and the house does go underwater, goes underwater, your children are only responsible, you're not responsible at all. Let's go. It's a non-recourse loan. So they could give the keys back to the bank and walk away. But the
Mhm.
very good part about a reverse mortgage is that if you have that line of credit,
Mhm.
it's a raising, increasing line of credit at about 6.5. It ranges
Mhm.
depending on the interest rate, about 6.5 to 7.5% interest on your money compounded. So if you start off with a credit money in there of $100,000, in 20 years, you have close to $800,000 in there. That money is yours. The
Mhm.
difference between a reverse mortgage and a line of credit
Mhm.
is that we can never shut your mortgage down. In times in COVID, in the time of 2009 when the banks went down, they came in and closed all lines of credit. They shut you right down. You can't get any more money. The line is canceled. On a reverse mortgage, the government can't do that. The line continues to grow and grow, and you could draw on that money at any time.
Mhm.
You could want to be paid, if you want to pay back a reverse mortgage, you can. Interest principal, lump sum, or no payment. Again, as long as real estate taxes and homeowners insurance is up to date, there never will be a foreclosure on your property. So it's really a good niche product,
Mhm.
especially if you're going to purchase. I'm talking about to purchase on a reverse. You save a lot of your retirement funds by keeping them in your bank and purchasing on a reverse loan. A lot of people are doing this. They feel their houses are too big, so they want to right size to something else,
True.
less bedrooms, whatever. All right. And they could do that. I'm sorry. I lost my train. The phone was
It's
ringing.
totally fine. It's totally fine. So I have a question for you, and I'm going to use just an example. I come to you, I have a home that I've been in 18 years,
Yes.
purchased it in, I'm going to just use numbers, $400,000, but
Yes.
now it's worth eight. So I've got $400,000 equity. As
Right.
I'm in the right age group, I decide to take that money and purchase a condo at the shore so that I can have what I've always dreamed, a summer home at the
Yes.
shore. Is that doable? And is
It's
that a
very
wise
doable.
decision? Okay.
The only thing on the condos where there is, it's not a problem, a condo, but it has to be, we have to get spot approvals on a condo. Like we have to go to HUD and get that approval or that apartment approved by them in order to do this. Now, a
Mm-hmm.
lot of times they'll deny that. Or sometimes they when they deny a spot approval, we go for full condo approval. So that
Okay.
now the whole complex is approved FHA. And not only do we get you, we get everyone else in the condo. We send out flyers. So it is a good product. I do this all the time. I get spot approvals or full
Mm-hmm.
condo. Right now, I'm going for a full condo approval for New Jersey on a project because they
Okay.
didn't want to do spot, but they feel the whole thing could be approved. So that's what we're doing.
All right. So going back to my example, I just assumed that all 100% of that equity, but I just realized you don't get all of the equity. You only get like 50 or 60% of the equity, depending on your age.
On your age, the older you are, the more money you get. It's as simple as that. It's not a loan to value, it's an age to value. So if
Correct.
you
Okay.
come to me and you're 70, okay, if you were 70,
I'm not
if,
in a hurry. No.
if you were 70 and you were buying, say, a $500,000 house or condo, okay, the cash required would be 330. The rest we give you a loan for. But that same person buying a 500,000 is 80. All right. They're now getting $280,000 in money.
Okay.
So yes, this is really a really good project, especially in your senior years. You don't
Okay.
want to spend all of your equity money on something. You want
Mm-hmm.
to make it a write-off. So how do you do that? You do the reverse mortgage. It's great. I
And
can't
you
find outside, there are no negatives. There really aren't.
and
And
you
all those wives' tales out there about you not owning your house, we don't take your deed. Never,
right.
never, never take your deed. It's always for primary, from 1 to 4 family and condo. All right.
Mm-hmm.
You reach, and I can't reiterate this enough. You retain title. We don't do this. That's a wives' tale.
And the other thing I wanted to ask you too, you had mentioned the last time we spoke that if I didn't invest it in a physical property, I could
Right.
invest it and collect interest on that. So could you elaborate a little bit more?
You mean when you leave the money in your line?
Yes.
Yes, it's a great line. It's better than any bank out there. It always was. It always was. If you go to your area bank, which could be TT, Chase, all of those banks,
Right.
they're giving you about 2 to 3% on money that you're going to tie up for years and not touch it.
Mm-hmm.
This money goes into our line of credit, okay, and gains interest at 6.5 to 7.5% monthly. You have
That's
to see,
great.
and I'll send a growth chart on everybody. They get a growth chart. And it's amazing how fast the money goes because it keeps compounding.
Mm-hmm.
All right. Now you could take this out. I mean, I'll use the same example I always do.
Mm-hmm.
When the man called me and he had prostate cancer, doctors gave him a month to live. Just a month, a month.
Mm-hmm.
And in his line, he had a 1 million certain amount of money. His house devalued to $600,000. It
Oh my
devalued.
goodness.
That was the value of the house. Wanted to know what to do. We told him immediately to call the bank and get his $1 million out of his credit line, which he did. And what he did is he gave it to his daughter. Now, his daughter just got her inheritance. So he did pass away. Bank called. Daughter said, gave it to a real estate to sell it. Bank took it back. She's not responsible for any money to be paid back. So it's a non-recourse loan. I keep saying that over and over.
Right.
So she got $1 million. The house was valued at 6. She made out so much better. Not that she made out because her father died.
No, I
That
understand.
was
Financially,
terrible.
though. Yes.
But financially, she was set for her life with $1 million. So this is a great line. And I always send the amortization highlighted so you could see how that money grows. We just closed, Lisa, you and I just closed a deal.
Right.
And it was a purchase, and I made the man bring $100 to closing. Why? Because he had to open up his equity line. Now I know he's going to liquidate stocks and bonds, and he's going to put another $100,000 in there within a couple of months, which is fine. Could you imagine how that's going to grow? Now,
Mm-hmm.
this is from a very smart investor, and this is what I'm getting: an investor that's in a primary residence
Mm-hmm.
that does the reverse mortgage because he wants that equity line. Now, whether they purchase or just go for a straight heck doesn't matter. That equity line stays there for them. It's a very serious and great thing for them.
Mm.
All right.
Oh, definitely. I think they're very happy, our clients.
Oh, I know they're happy. I talked to them. I know they're happy.
Oh, that's so sweet. Now, you mentioned something about seller's concession, and that, and
It's so amazing. This poor guy missed out on his seller's
I
concession.
know, I
In
know.
April, 400.1, new book came out. We have to study it now, so we're ready for April. 6%. We're not allowed to say seller's concession. I have no idea why, because it is a seller's concession. We
Sure.
have to say third party concession. That's what HUD wants. That's what we'll do. But you're allowed a seller's concession of up to 6%, which is amazing. Amazing. All right.
Mm-hmm.
Now closing costs could be paid by the selling entity. And
So
I'm
you're
so
saying that in last year, well, it's now that we're into 2024,
right.
that a seller's concession was not an option for a reverse
Was
mortgage.
not for a purchase. You were not allowed a seller's concession for whatever reason.
Hmm.
Of course, there's been a
Interesting.
lot of meetings going on with HUD, and they finally agreed, coming out with a new thing,
Mm-hmm.
400.1. And here we are. Seller's concessions are allowed in there.
Well, I know there are seniors that really do need to take advantage of the reverse mortgage. I mean, they're struggling out there. So
And the
having the
seller's
seller's concession
concession.
is huge.
That's amazing. Their closing costs are paid by the seller.
That is
Yes.
definitely
That's
huge.
an amazing thing. Yes. So
Yeah.
there's another asset to the reverse mortgage that just
Right.
came out. And anybody I'm getting now for purchase, believe me, they're waiting until April to close. They don't want to close before April because they want to take advantage of this, which is fine.
Mm-hmm.
Every penny counts for a senior. I always say this: what's the difference between a senior and a 50-year-old? Well, one thing: a paycheck. And that's all that's different. They're restricted on their money, and the other people are not. They're still working.
Mm-hmm.
So the only difference is the paycheck. So we have to give them a paycheck. Reverse mortgage
Right.
accomplishes that.
Yeah. I just think I just love this concept, and I it's been around forever. It's just like I said, there's some myths to it, and I don't think that a lot of people are educated, and I hopefully this episode will really wake people up and see the opportunity that's there that they can take advantage.
Well, the good part about it is I had a very obstinate client that was really obstinate. And
Mm-hmm.
he had all these myths right up front, and he wouldn't listen to me. So I said to him, you know what? I'm going to pay for your counseling, which I just made her charge it for me. I made her call him and go over the whole reverse mortgage. Now, this is a government entity separate from us. All
Mm-hmm.
right. And
Mm-hmm.
she spoke to him, and she went over this whole reverse mortgage. And she sent him other documents to show this is a myth. And
Mm-hmm.
sure enough, he's going ahead with the reverse mortgage. But a lot of them get very nervous because their neighbor, their lawyer, their
Mm-hmm.
financial advisor, they twist everything around to make it look bad. Or the
Mm-hmm.
neighbor that really doesn't know is just repeating these lies that are out there. It's a very safe program. It really is.
For me, I look at it as, I talk to a lot of people and they always say, oh, I really wanted a summer home. I really wanted to be down the shore.
That's
And
right.
I am seeing a lot of seniors during retirement and they're deciding to just sell their home and move down the shore. Because at this point, the kids are all grown, you've done your
That's right.
thing as a parent, and now but then the kids can come and visit you and have memories now. And so you sell your home, you purchase a home down the shore, you can take advantage of this reverse mortgage, or maybe you want to have the two homes. But again, there is money here that you can use how you see fit.
Yes.
And I think it's an amazing program.
It is an amazing program, but remember, there's the fine print in there says primary residence.
Agreed.
So, so if they're buying the second home, that has to be their primary residence. That's the one we put the reverse on. And you're
Agreed.
only allowed one reverse. So even though you have the other house, we put it on this one, and that becomes your primary residence.
Mm-hmm.
Yes. It's an amazing thing. If I could see seniors do one thing that they keep saying, I woulda, coulda, shoulda, but I never did. Just one thing for themselves because, seniors are a different age. Some of them go through the depression. A lot of them are just boomers and they just keep giving and to their children
It's
and
very
they
true.
just never do anything for themselves. That new car that's not clinking down the road that everybody knows Mrs. Smith's coming from 2 blocks away. I mean, they really need more in their life, just an enjoyment that they feel I'm not
Yes.
entitled to this, but they are entitled to it. And they have equity sitting there. Why not use it? Why not use this?
So I guess my last question for you is there any fees that you have to anticipate in order to do this reverse mortgage?
You
You made
have
the
to pay for
decision to move
a
forward.
lot of times you have to pay for counseling, which is $130. A lot of
Mm-hmm.
people charge more, but I sort of give out the ones that charge less. There's counseling that they have to go through because I need the certificate to proceed. There's an appraisal fee. All right, a
Mm-hmm.
lot of them can't afford an appraisal fee because let's face it, they're having a hard time just with this monthly money.
Mm-hmm.
We sort of waive it a little bit and they take it out of closing.
Right.
There is the mortgage insurance premium. That is a big nut. It's 1.5%, I think, of the appraised value. If that's true, it is a high fee, but that's pool money. Where does it go? It goes into the government's pool money. Nobody touches it. When houses get sold or houses, God forbid my clients pass away, that money comes out to pay the bank back if the house is underwater. That's where that money gets utilized. We're not allowed to change it. We have no access to change that fee. It's a
Okay.
government fee. But outside of that, you have regular closing costs. Yes, there's an origination that the bank uses to pay their employees.
Mm-hmm.
But that's it.
Mm-hmm.
That's it. It's a really good loan. And if you open a credit line, or
Yes.
you put money into this credit line, believe me, within 2 to 3 years, it's all absorbed the closing cost, and you
Oh,
just
exactly. Because the interest you're making on the credit line is
is
much more than
is
you would
so great.
see
Yes, yes.
anywhere else, be honest with you. Because
Hmm.
right now, doing the investments and the banking, I may see 3.5, 4%.
It's not there. The money. It's really
No.
not there.
So, Elaine, if our listeners are, are getting excited and want to call you, how can they reach you?
Oh, I work for Cross Country Mortgage. It's a great company. It's a company with a heart. Listen to me. I
I
have the
love it.
slogan that I am the difference, but Cross Country is a company with a heart. So I work from my office phone goes right into my cell because everybody calls me. Like last night, I worked till 10 o'clock.
Mhm.
Everyone calls me to do mortgages for them, these reverse mortgages. My
Mhm.
number is 516-220-8037.
Okay.
That's the number. And if I don't answer, because you're directly coming to me, I call you back as soon as I'm off the
Oh,
phone
I know
call.
you do.
I
I know
do.
you do.
I
You are
call
very
back.
good about
And I
following
don't
up.
stop work until every call is returned. So it's fine. Mhm.
Oh, that is awesome. So, well, I am excited. I hope my listeners are excited too. And if you would like to know more, have any questions for Elaine, please comment below and make sure you hit that subscribe button so you get more topics that we're going to cover throughout the year for 2024. And thank you for listening and stay tuned to the next episode. Talk to you soon. Thank you, everyone.